Okay, so I'm going to follow a slightly different format here. I'm going to be using the next few minutes to talk about the way we design, construct, and manage our now award-winning sustainable managed accounts. Just quickly start with the SMA business at Russell. It's an exciting area to be involved in. We started SMAs a little over 6 years ago in kind of core portfolios. We then launched our first SMAs in the sustainable space in March 2022. And you can see the growth in AUM. The orange line reflects the growth in the sustainable managed accounts. So yeah, really important business for us, one that it's exciting to be involved in, and you can see the managed accounts are available on all major platforms. So quickly on the design of our SMAs in the sustainable space, well, you can see the 5 options we've got there on the right-hand side across the different risk spectrums. As I'm sure many of you will be aware of, once you go down the sustainable space outside of equities, things get a little more challenging from a reporting and measurement perspective. But what all of our managed accounts have an objective on is to have lower carbon emissions than their respective benchmarks. We also measure ESG risk scores across the equity portfolios, and all the managed accounts have lower ESG risk scores than their benchmarks, as you would expect. Quickly on the construction of the managed accounts in the sustainable space, this is really consistent with all of the ways we build SMAs at Russell. We've got 3 core building blocks. I'll start in the middle there, the specialist funds. So these are the active primarily sustainable strategies that we're using from active managers, and that forms the core of our sustainable characteristics of the managed portfolios. We also combine that with passive style strategies to help deliver these managed accounts at an attractive price point. And then on the right hand side, we use all of the managed accounts have an allocation to 30 large cap Aussie shares. That's something that advisors and their clients really like, having that direct exposure to franking credits, and has been a really popular feature of the managed accounts in both the sustainable and the core SMAs. Just quickly touch on our research process. Shaitan just referenced that. It's an area of strength for Russell. This is how we research the Aussie sustainable strategies. Our research coverage is 11 managers in Australia. There are clearly more, but there are 11 that Jane Williams, our manager research specialist, covers all the time. 3 of those make it into our sustainable managed account. You can see those names on the screen there. And we've selected those managers to complement one another, to provide different types of exposures, but ultimately to deliver strong investment returns. In terms of what we're looking for and how we assess these managers, so on the right-hand side there, the IPO framework is what kind of is the overarching way we assess sustainable managers. So we look for what's the intent, what's the process, and what's the outcome of a particular active sustainable strategy. All managers have very different approaches typically to sustainability. I'll maybe just reference Alphinity just because they're probably the easiest to explain and describe, but they use the SDG, or the Sustainable Development Goals approach, to within their intent, process, and outcome, and that's their measure of success in terms of the portfolio from an ESG perspective, and obviously they need to outperform benchmarks as well. So we have sustainability strategies on the equity side, which you can see on the left here. And then on the right-hand side of that green box are also some of the more defensive fixed income-based sustainable strategies as well on the credit and on the fixed side. So we've got sustainability or active sustainable strategies throughout our SMAs, both on the growth and the defensive side of our portfolio construction. This is a kind of a snapshot of the balanced sustainable SMA, and again, the themes that I've articulated there are pretty clear. So you've got the direct shares portfolio that investors are holding directly those Aussie shares on the left-hand side. The central core, that wagon wheel, is our active strategies that are kind of the DNA of the sustainable SMAs. So a lot of The growth strategies shown in the blue, and on the green are the more defensive active strategies that we're using. And then on the right-hand side are the more passive style strategies to complement the overall portfolio. So I've spoken about design, spoken about the construction. This is a little on the managed side of things, in terms of what we're doing day to day. And I think, you'll all be familiar with the volatility we've seen in equities this year from Trump and Liberation Day. This chart perhaps doesn't, it shows the exposure to growth assets in our balanced portfolio over the last 12 months. You can see we were taking profits or reducing equity exposure in the lead up to Liberation Day on the concerns around tariffs, etc. But we also noted that there was a lot of oversold themes coming to the market, and that week of the 6th of April was when we started to add to equities, not just in the sustainable managed accounts, but across all of our retail funds in aggregate. And we added that to global equities and also to hedged global equities. So taking advantage of the Aussie dollar at 60 cents. So a really good example of the managed part of our design constructs and managed process of our sustainable managed accounts. I'm going to finish on performance. So that managed aspect was an important driver of Q2 performance. Here is some of the returns across 5 SMAs in the sustainable space over the last year. Clearly, I think performance was an important driver, not the only driver of the process to find the winner of this category, but it's also important to note that both the balance and the growth portfolios have got 3-year track record. So they were launched at the outset, and I just want to mention the 3-year performance as well, because I think there's a lot of advisors get concerned about sustainability and performance, but these managed accounts in the sustainable space have actually delivered even stronger returns than our core portfolios over 3 years. So we're really proud of the performance from these managed accounts, not just the sustainable, but the core managed accounts. Very proud to have won this award, and thank you again for the opportunity to talk about the funds.